Hey, what's up, everybody? It's Matthew Mickey. Most of you guys know me as Sergeant Mickey or Drill Sergeant Mickey or Lieutenant Mickey. For the last 20 years, I've had the honor of serving so many of you guys, thousands of you guys, hundreds of you guys. From teaching, military history and all that, being a drill sergeant, to leading soldiers in Iraq and Afghanistan. It's been a pure honor. As I transition out of the military, I won't stop taking care of you guys. I just have to find a different way to do it. And this is the first stance of me trying to take care of you from a civilian sector, right? So, what I want to teach you guys today is what's actually happening in the economy because there's a lot of red flags out there. But before we go into that, you guys always known that I have studied the economy and the stock market for years. After patrols in Afghanistan, you would see me reading these books and studying this stuff, and you'd be like, why don't you just play Madden with us? And rightfully so. But like I know that the economy is the closest thing to what we do as leaders, planners, and operators as we did overseas. And this is just what my passion is. So since this year, I've got an actual Twitter account, which I know I said I would never do, and I only follow people that I have high respect for, right? And the people that you see on the screen right now, 42 Macro, Darius Dell, the Bond King, Steve Van Metrics, Serge Perfilia, sorry for butchering your name, Andy Constant, Sim Carsan, Macro Alf, and Jack Farley. You guys all know how I feel about mentorship, and these are the guys you have to follow because they are going to save you from the storm that's about to go down. When is the storm going to go down? Who knows? How it's going to go down? Most of you listening to this have never even seen it. These individuals right here have spent their life work training this as a profession, just like we train being a soldier as a profession. We know where to enable and the capabilities of any asset. We know everything about that country standpoint. And, like we studied our wars as a profession. Well, now we're not at a physical war overseas with a known enemy. Now we're at an economy war. Please feel free to share this with whoever or however. Like, I don't care. I just want people to know. So since November, I've been studying these guys and studying every piece of information they put out, right? And what I want to talk about is what I've learned from them showed me that we, the consumer, have a false sense of security, an insane inflation issue, and everything is going higher. So this week, the PPI came out, and December's prices went higher by 10%. That's insane. The producer's price index, is essentially, I mean, look it up. Like, I'm not going to try to explain it because this isn't my life works. But December went higher by 10%. The news never mentioned the reason for these higher prices. Like, I went grocery shopping with Denise, and I went to buy Diet Coke, and I'm in New York City, as most of you guys know. Like, 2 weeks ago, I bought a 12-pack of Diet Coke for $2.75, and now it's at $7.85. Right? That's insane in just a week. So the media never mentions the reason why we're facing inflation or higher prices, and all I can say is the Fed. The reason behind the inflation problem is the cocaine that the Fed's been feeding us for a decade now. So what is the cocaine? It is the trillions of dollars of liquidity that came from quantitative easing, stimulus money, bailing companies out, funny money, monopoly money, whatever we want to call it, which came out of thin air as the response of any of the emergencies you want to call them for the last decade, right? They can't ever let an emergency go to waste. So trillions of dollars are created, right? Public debt increased, and the cocaine chased assets all over the place. Those trillions of dollars, most of it landed in the pockets of corporations and institutions who chased assets with the money, which led to stocks, crypto, real estate, commodities, NFTs, everything to go to the moon. And some of the silliest spending I think the world has ever seen. Like, some of the trillions landed in the pocket of the consumers. Like, we consumers use the funny money to chase fewer goods, and we're still chasing fewer goods, right? Because when people chase fewer goods at the same times, we get a lack of supply. and shortage causing price to increase, lending to inflation, right? Now it becomes a game of expectations. Our expectations for inflation are moving higher and higher and higher. That is, therefore, we are buying now because we expect price to increase in the long run, right? This leads to a mass of consumers to stampede goods, and those fewer goods and assets push inflation higher. It has become a self-fulfilling prophecy. If everyone is expecting inflation to go higher and we stampede for lower prices now, this leads to price to increase. Human psychology, as you guys all know, has been proven for hundreds of years to repeat this cycle, right? So inflation has always been a monetary wonder of the world. Inflation is always due to the Federal Reserve, in my eyes, right? The virus, China, an asteroid hitting the planet, Taliban, like those are all secondary effects, right? If the Fed overstimulates a hot economy that doesn't need to be stimulated to begin with, it creates excess liquidity, putting the fear of inflation in the minds of people. Because even if you don't have an education in macroeconomics or quantitative finance, like we know that there's no such thing as a free lunch. Something has to give. Like you borrow, you pay it back. You borrow, you pay it back, right? And so we know in the back of our mind, inflation is coming, and at the debt cycle, we're going to have to once we hit the debt ceiling, we have to pay it back, right? Something has to give right now in what we're facing. And so to tame the inflation, the Fed has to act now to cool off the inflation because they're behind the power curve. After they tell us, like all last year, it's going to be transitory. My kitchen sink knows that that's not even a reality. It doesn't exist. I looked up the definition of what transitory inflation was and couldn't find anything mentioned before 2020. Now the Fed has to play catch up for being really far behind. So they're going to have to be really aggressive by raising interest rates higher. This is known as monetary tightening, which leads to borrowing limits being lowered due to higher interest rate, right? This lowers the demand in the economy and cools down the inflation. And it's going to take a while. Now the Fed might have to be so aggressive that it might crash the stock market and reduce the recession that comes behind this. And this will be a rip the band-aid off method, and it's due to them trying to decrease the time of the deflation, right? However, it all comes down to the interest rates, right? The PPI that came out this week led to my Twitter becoming positive from the news. Like they think the month-over-month reading is cooling down inflation. This might be the peak of inflation, some of them say. Assumptions. That's all they are. And you guys know my philosophy on assumptions. If it's not backed up by data and intel, then it's not worth anything, right? Cost is still going to go up at an accelerated pace. PPI came lighter, had a lighter number overall bias, right? However, if you look at the core PPI and from the producers, it climbed more than expected to 8.3%. That is even after stripping away food and energy numbers from it. Understanding the urgency of the Fed actions, but look at real wages, right? They are deeply negative to keep up with inflation. Like as service members, we always get excited, and we're excited this year because Biden gave us the largest pay raise ever at 2.3%. Well, the CPI number is 7%. So did we really get a pay raise? Because the CPI tells us what the inflation is. So, like, we're deeply negative to keep up with the inflation. This should lead to us, the workers, to demand higher pays and continue to do so as we see higher prices and less spending power from our paycheck. Like, we work hard for our money. So you might be happy that you got a raise, but compared to inflation, you still got a pay decrease. So don't be happy about it. 7 minus 2 is 5. So this should cause more awareness of us everyday people and cause a political backlash, right? Due to us being more informed, thanks to the people I mentioned earlier, right? Whoever is in the White House is always going to get blamed. This isn't a political issue, though. Like, any inflation is always the blame of the Fed Reserve and the weakness of the monetary policy that they incorporated, right? So this political backlash will cause the administration to put pressure on the Fed to tighten up the inflation. Things are getting so bad that people think making it above 100K will make them feel financially okay. Really, in most states, that's nothing. Maybe 180K. 100K in Cali won't get you anywhere. You might as well, you can pay to put your head in an Amazon box and call it your house. This inflation is not cooling off anytime soon. Look at the shipping rates from anywhere, from one country to another. Like, the media is saying inflation is due to supply shortage, the virus, I didn't realize that COVID sunk ships across the globes. Are the ships social distancing or quarantining? No. What's causing it is we have an insane level of demand overwhelming the shipping business, leading to the shipping rates to rocket. What is causing this insanity? Demand against the cocaine, the funny money, the stimmies. Now the feds now say we are seeing signs of a slower optimistic regarding the economy. Duh. This is your mandated price stability. This is your mandate, right? Price stability to control inflation and employment. And they have failed at both. Inflation is out of control, and failure to reach full employment, whatever that even means. All these job gains are not sustainable, is what I'm trying to say. And once we get a sign of a bad market or the economy starting to sour, these jobs are gone, right? We continue to focus on climate change, like Fed, because that was on their news this week. Climate change and the diversity of who sits on the chair, right? Maybe the climate change is affected by the printer that's heating up from all this stimmy money that you're producing, right? All right, so Fed zombies are ruining us, robbing us blindly. One minute. My English bulldog was like acting crazy. So, like, we're getting robbed by the Fed, but because they're diverse, we should feel better about it, them raising the interest rates, right? And the media will say it's okay for the Fed to raise interest rates. The media will fill your head with all kinds of garbage saying, like, it's good for the Fed to raise interest rates, the economy and market's going to be fine. Look at corporate earnings, like, look at the strong consumer, stop worrying, right? But they're not going to tell you this. 3 stages of consumer spending they don't tell you. Stimulus spending led to a stronger consumer, which will translate to higher corporate earnings. Well, stimmies are gone now, so that phase is gone. Exhausted savings, well, that is plummeting below pre-pandemic numbers right now, so that's gone. So now we're in the phase where everybody swipes credit cards up and down, right? That's the phase we're in. And that's going to only last so long, right? When this all falls apart, corporate earnings will decrease, the economy will dip into recession. 2021, most stimmies were used to pay off debt, leading to credit cards, cars, and every other loan there is, right? However, while we were paying debt off with these stimmies, the typical person, the banks and the auto loan companies and the mortgage loan companies were raising the interest rates to try to make up for the lack of us using our debt, right? So now fast forward to today, and consumer debt surges $40 billion faster than ever, right? Guess what? Won't go down, though. The increase in interest rates while paying off these credit cards. This was fueled by holiday shopping. This caused an increase in debt. And now, after paying off a record of credit cards debt in 2020, we messed that opportunity up and started swiping. We, as a consumer, are addicted to COVID stimmies, right? And that doesn't exist now. And that leads us to an addiction to spend and pay off with job and stimmies. Spend and pay off with jobs with stimmies. We took one of those away, the stimmies, and now the jobs are next. Left with all of this debt obligation you gain while being on this addiction. Don't be a zombie begging to get slaughtered. Pay attention to your credit card. Pay attention to all the interest rates from all the debt you have. It's going to make it harder to pay it off. the higher it goes. Average credit card rate is interest rates are 16%, where the government is close to zero. Wall Street can borrow money with close to zero interest, but the consumer has to pay 16% on their credit cards. Do you see how you are just a sheep being led to the slaughterhouse? Pay your credit cards off. Don't make minimum payments. Pay them off. Save up to 10 months worth of paychecks. And don't be stupid. Who is to say inflation will go away? Stagflation is where spending stagnates, the economy stagnates, but price stays higher. And when there isn't a consumer, what do you think corporates do to make up for the losses of sales? Higher prices. You don't need the holiday debt or the vacation debt. And listen, the media and the Fed will say they don't see weakness in spending. Like, who do you trust to lead you through all this? Like, the people on this screen is who I trust because they're the realest people ever. Like, they're not out to make money, and it shows. They have plenty of material online to teach for free. Like, pay attention to them. Now, as the Fed Reserve raises these interest rates, the banks, or lowered the interest rates in 2020, like the banks started losing money, right? So they started adding all these kind of fees, like you went over your balance fees, overdraft protection fees, like crazy amounts of fees just started coming out of nowhere. And now, once the Fed Reserve lowers it or raises the interest rates, like those fees will start going away, and it'll make them look like they care about you, right? However, don't be silly. As the Fed raises rates, this now allows banks to borrow the money at a cheaper price and lend it at a higher rate to us. The media and Fed will say we don't have the same risk as we did in 2007 before the market crash, right? And household real estate, all that stuff, right? Whatever, dude. Like, be like Japan consumers who have already been through this time and time, right? The little man saves more than they spend, right? It is too late for us to save the cocaine like they have been doing this whole time. Pay your credit cards off. 10 months of monthly savings, and God forbid the economy goes sour and we all lose our jobs. We have make sure we have no debt and 10 months of savings if that does happen. If you don't, and you keep buying cryptos and NFTs and pretending like you're a little market maker and a hedge fund manager with no experience, and you keep racking up these credit cards, like lose your job, well, we already know how this ends. Like, share this. I need to tighten it up a little bit, but this is the first video of what I'm learning, and I hope to share more with you later.